Hello and welcome to the BizNews Breakfast Briefing. I'm Lucy Ferreira for BizNews.com. In today's show, South Africa's criminal justice system is increasingly under scrutiny with escalating crime statistics and questions around the police minister's fitness to hold office. We hear from board chair of the Institute for Security Studies, Dr. Cele, about the prevailing security situation in the country. And then a sizable portion of the relief funds pledged by the National Empowerment Fund and Solidarity Fund for the businesses that were almost completely destroyed by the July riots last year will be reserved for black entrepreneurs only. Michael Apple speaks with Piet Leroux, the chief executive of Cele, questioning the race-based disbursements. We then round off the show with the daily news update from our partners, the FT in London. First up, though, it's Alec Hogg on the markets.
Thank you, Lucy. Good morning. It's Thursday, the 21st of July. Nice sound to start off the market report with, isn't it? The Nasdaq Composite Index up 1.6% last night. The S&P 500, the more broadly based index in America, up by about 0.5%. And that followed a Johannesburg Stock Exchange that was slightly lower yesterday, primarily because of some of the heavyweight shares coming under some pressure. I'll give you more information on all of that. But the big story of the day was the result of Cele for the second quarter of the year. In other words, the 3 months to the end of June. It had been expected that the profits would be down and sales would be down, primarily because of what's going on in China, where the Shanghai plant has been closed because of COVID in that country. And the consequence of that was that Wall Street anticipated around $16.5 billion in sales for the quarter and around $1.9 billion in profit. Well, as it happens, Elon Musk delivered a happy surprise. Sales were around $400 million higher than anticipated, and profits were the same amount higher as well. So it just shows once you start getting the scale as Cele is right now, that it becomes a money-making machine. The share price was only up about 1% after hours. Something that did not impress investors, certainly those in cryptocurrencies, was the news that Cele has sold 75% of the Bitcoin that it bought last year. It's reduced its holding from $1.5 billion, that's what it invested there, to just $218 million now. This had an impact on the Bitcoin price, which came down quite sharply. It's trading this morning at 22,787 after being on a bit of a tear over the last few days. Bitcoin down by about 2.5% overnight on that news from Cele. The other bit of news from Cele is that Elon Musk reckons that they're going to finish the year with about 1.5 million cars sold, up 60% on last year. So they certainly are going in the right direction. The good news that came out of Netflix continues to impress the market. You'll recall that Netflix had 2 really bad quarterlies previously, and then they came out earlier this week with numbers which showed that they're losing subscribers, but not as badly as anticipated. And Netflix's share was up 7.5% yesterday, bringing the week's gains to 14%. Part of the reason for that is that Netflix, looking ahead, is not going to be going backwards quite as quickly as had been anticipated. And there's a lot of hope that they'll be able to generate new revenues from this deal that has been done on advertising with Microsoft. As far as the rest of the markets are concerned, the Rand lost 4 cents to the US dollar, but we still at 17 Rand and 13 cents. It gained 4 cents against the British pound, 20 rands and 53 cents, and 1 cent against the euro at 17 rands and 49 cents. The Brent crude oil price is steady. It lost about 75 cents a barrel to $106.25 a barrel. And as mentioned earlier, the JSE All-Share Index was down by about 0.1%. The Geltec basket was up 4%. To 452 Rand and 37 cents, and quite a big knock for the gold price, which now has fallen below $1,700 an ounce, and this morning it's trading at $1,692. Here on the Johannesburg Stock Exchange, it's interesting to see that we're starting to come into our own reporting season. JSE listed shares do not report every 3 months like they do in the United States, but mostly only every 6 months. ArcelorMittal is coming out with its financial results for the half year to the end of June, next Thursday, and that share price has been jumping. It's almost like analysts have been reminded, here's a big exporter, it benefits when the rand is weaker, and they've had reassessed ArcelorMittal, and yesterday the share price was up 16% after a very good day the day before, and it's gone from 5 Rand 17 a week ago to 6 Rand 57 today. We'll be covering those financial results. They're quite important, and ArcelorMittal has become a real poster boy for the turnaround situation that is possible in South Africa. Some of the other stocks that did well yesterday, Massmart up 9%, Wilson Bailey up 7.5%, and Grinship continues, that's Grindrod Shipping, with its good run. It was up by 6%. On the way down, though, and this is the reason why the JSE overall index was a little softer, Anglo Platinum lost 3%, Kumba 2%, Investec 3%, and then Karoo, which is the South African company that is listed on the JSE and NASDAQ, that was down by 7%. Well, coming up for you, 2 cracking interviews from my colleague Mike Apple. Remember, the full interviews are on the Biz News radio channel. My goodness, you're going to enjoy the next 10 minutes.
And now for Dr. Yaki Cilliers of the ISS.
The police minister is in the headlines, very often for the wrong reasons. I see the Democratic Alliance has a petition going around calling for him to be sacked. And I just want to take a look at the pedigree of the man that the president chose to lead this critically important portfolio. Cele was police commissioner. He was fired by Zuma, of all people, in 2012 for quote-unquote dishonesty. And that was his role in the 1.7 billion rand property deal with Rushabangu. He gets redeployed to lay low as the Department of Agriculture's deputy minister, and then he's parachuted back to the police, this time as minister. Putting aside the fact that he's 70 years old now, and I don't want to sound ageist here, was this or is this the best man for the job?
The common understanding is that the reason why he is appointed has to do with regional balance within the top structure within the ANC. He certainly is a man that is full of energy and full of vigor. But I would argue that what the police needs is stability, management, and giving the National Police Commissioner time and the opportunity to do what is necessary in fixing police culture and focusing policing on organized crime, because organized criminals are responsible for the vast majority of violence, mayhem in South Africa, and they benefit and substantially exploit situations like we had with the July riots. So that kind of stability, management, I'm worried that he is a man of action and that he doesn't step back and allow the opportunity to think about what needs to happen with policing. It's all about reaction. It's all about bringing the stability units, the tactical reaction and so on into a crime scene or where there's violence. That is what I would refer to as gesture policing. It doesn't really make a difference. What makes a difference is the slow process of detective work, working with the Hawks and the NPA, and that is a very different style. It is a work that is driven by data as much as it is driven by intelligence. By data, where are the crime hotspots? Focus your attention at crime prevention and prosecution and so on in those areas. You used the example of the people that were highlighted as being responsible for the July riots. Yes, that apparently was a list of people that were prominent in social media. It's very different to taking people with to get sufficient evidence that you can take people to court, and that in South Africa, with the Bill of Rights and all the guarantees that we have on individual liberties, getting that to stick in a court of law. And I think it reflects many of the weaknesses that we face in our entire criminal justice system pipeline, from being a suspect to getting a conviction at the other end of the funnel.
Now, you've spoken in the past about, and I just want to change tack slightly for a second, about political killings. Now, getting involved in politics in South Africa is a life and death game. It really is.
Yes.
And if you observe the trends from previous years, are you concerned we're going to see more of this within the ANC in the lead up to the December elective conference?
We did a study beginning of this year where we pointed to actually used artificial intelligence and data scraping to look at the correlation between political events, particularly within the ANC, and broad violence. And I think it's no surprise that we found that there's quite a correlation. And as we already see in KwaZulu-Natal, and we expected this in the run-up to the elective conference of the ANC in December of this year, a few ANC politicians and other people are going to get killed because it's become a life and death struggle. So we are worried. The linkages between organized crime, the taxi industry, and other criminal syndicates is well established in South Africa. The fact that the majority of illegal weapons in South Africa actually come from the police, ironically, is well established. It may not be the full situation at the moment, but historically, certainly that is the situation. So we need to clean all of that up, but it's a dangerous year for South Africa because the ANC is the violence, the instability within the ANC is spilling over and becoming practically a threat to ordinary South Africans.
Now, if you look at the latest quarterly crime stats of the first 3 months of 2022. I'm just going to go through them, so just bear with me. Murder up 22.2%, children's murder up 37.2%, attempted murder up 25%, contact crimes 15% up, rape up 13.7%. And we know rape is one of the most underreported crimes. Carjacking up 20%, cash and transit robberies 26% up, truck hijacking 31.4% up. Are these stats so bad because we're coming off a lower base compared to a year ago? Or should we truly be concerned by what are horrendous figures?
We should clearly be concerned. They are coming off a particularly low base given the impact of COVID, but we must be concerned. South Africa's crime rates, particularly our murder rate, which is always the most dependable statistic because there's a body, are horrendous, and we need to fix this. And it's not. It's driven by inequality, poverty, all of those kind of things, but it is also driven by inefficiencies in the criminal justice system and poor policing and the lack of accountability, which has become a bit of a culture in South Africa. So yes, we need to fix this, but it is fixable. In various presentations that the analysts at the Institute have done to police and others, they have pointed to what's happened in New York and other places where crime trends have turned around. And South Africa was doing well until about 2011, 2012. We had investments in policing and the right types of policing, but political interference and the mismanagement that started with the deployment of Jackie Cele and others after that caused a tremendous amount of damage. Just think about the fact that all the specialized units that are now being reestablished were disbanded by Jackie Cele. So we are very often our own worst enemies, and we invest in public order policing and invisible policing. Yes, that is like putting a plaster on a gaping wound, but you need to give the victim the medicine to heal. And that's what we're not doing. And that is about police culture, about management. It's about focusing your efforts where the real problems are.
Next up is Piet Leroux, Chief Executive of Sakeliga.
The National Empowerment Fund is limiting the assistance that it is providing to businesses that had suffered during the KZN riots on the basis of race. Now, that is not the first time that happens in South Africa. We think it's problematic for several reasons. One, because as soon as you reserve the assistance to such companies, you in effect penalize companies who do business across racial barriers. So if you reserve aid to companies companies and say that they need to be 100% black owned, 100% black managed, then you're saying, well, we're not going to assist those companies who have black employees or who are co-owned or co-managed or co-operated. So these types of subsidies and incentives actually detract from what you should expect to be a normal process of inter-community business relationships in South Africa. So that detracts from normal business. And then secondly, the problem with the money that the National Empowerment Fund made available here is that a sizable portion of that, about a quarter, comes from the Solidarity Fund. And Michael, the Solidarity Fund was brought into being in 2020 in expectation and in the wake of the early lockdowns and the presence of COVID-19. But I'm quite certain that the money donated to the Solidarity Fund was never intended to be distributed on the basis of race. It was to be distributed as emergency relief. And so those are the two main issues that we have with this contribution, or let's say this exclusionary policy by the National Empowerment Fund.
Solidarity Fund. I mean, I suppose the name kind of gives it away, what its intentions are supposed to be. But okay, the motto of the National Empowerment Fund, I had a quick look. Their motto is literally growing black economic participation. They're pretty clear about what they seek to achieve. I mean, should we be surprised by that?
Yeah, I don't think there's reason to be surprised, except that the surprise here is really the Solidarity Fund's contribution to this. It's obvious what the National Empowerment Fund does, and I think what we should be doing as business is not support entities that do that. I mean, is that the kind of policies that we want to promote in South Africa? And so the surprise really is in the source of the funding. Now, most of the funding for the National Empowerment Fund comes from government, and it's government policy to do things like this, and that's to be challenged in courts, and we do that on some levels, and it's to be challenged in Parliament, and that's being done at some level. And so that's not too surprising. The surprising part here is the Solidarity Fund's contribution, and so that's why we sent a information access request to the National Empowerment Fund. It's a state entity, to ask what the terms of the funding from the Solidarity Fund was, and on the basis of which these allocations were made. And so that's the surprising part. The surprising part is that it appears that businesses, even if they didn't intend for the money to be for this purpose, in the end, the Solidarity Fund did allocate it for this. I don't think it's the spirit of the contributions made to the Solidarity Fund.
Yeah, and as you've previously said, the point is that you can be black and white, you can be co-owners in a business, and you're penalized.
Yeah, Sakliga is active in public interest litigation, and one of the piece of litigation that we were active in earlier this year, actually for 5 years, but we received judgment in the Constitutional Court earlier this year, was in the procurement regulations that were brought into being 5 years ago under Minister Pravin Gordhan. And we were able to have them set aside because they were ultra vires, not within his powers. But what that said, and what became practice in many state-owned enterprises, municipalities and so on for the past 5 years, was to limit tenders in government to black only owned or black only managed companies. And the irony of policies like this, and like what the National Empowerment Fund is now doing under the guise of other enabling legislation or regulations, which have not yet been challenged, is that they are penalizing inter-community cooperation at the ownership level, at the management level, and at the employee level. And we must realize the implication of funding and giving subsidies to businesses, but restricting that to the race, is that we're penalizing those that cross that boundaries. And I think that is harmful to normal business relationships, and I think the direction you want an economy and a country like South Africa to go in.
And here's the FT.
Good morning from the Financial Times. Today is Thursday, July 21st, and this is your FT News Briefing. Tesla's looking pretty resilient these days. Meanwhile, Italy's political drama continues, and Ukraine is getting some debt relief. But Sri Lanka's debt troubles are adding to fears of a broader crisis in emerging markets. I'm Mark Filipino, and here's the news you need to start your day. Tesla said yesterday its second quarter revenue rose 42% over last year. The electric vehicle maker also announced a nearly 60% jump in adjusted earnings per share. These numbers come despite production disruptions in China because of COVID lockdowns and high costs associated with new plants in Texas and Germany. Here's the FT's Richard Waters.
Tesla's really holding it together very well in an incredibly difficult time. Not only was its biggest plant, which is in Shanghai, shut down for much of the quarter because of local COVID restrictions, but it's facing all the same supply chain pressures that all other manufacturers have. Even despite all that, it's still churning out, as you say, this kind of massive growth. But, and this is the big but, there are such high expectations around this company. They've essentially got to grow their production about 70% in the second half just to kind of make up the numbers that people were hoping for to get back to the kind of 1.5 million deliveries that Wall Street's hoping for this year.
Wow, that seems like a really tall order there, Richard. Is this something they can actually do?
It's a really tough climb, and Elon Musk was sounding uncharacteristically cautious, I felt. He didn't throw any numbers out. He didn't give any predictions. He said by the end of the year, he was hoping, Tesla's plans say they should reach full production. But between now and then, he didn't stick his neck out and didn't say they would hit this goal. So I think it's going to be, a couple of very tough quarters of sledding ahead.
What do these numbers from Tesla say more broadly about the electric vehicle industry, if anything?
We do know that demand is just incredibly strong, and Tesla's orders go out through next year. Tesla's actually been putting up its prices, and I think one of the concerns right now on Wall Street is very much that as prices go up and as the economy looks more difficult, are we going to start to see demand for electric cars weaken? For Tesla, the answer is really no right now. They've got so much excess demand that, even though Musk is saying, well, maybe at the margin, there's a little less coming in. Nonetheless, they've got so much of an overhang here that it doesn't really matter. Now, for other electric car makers, that might become more of an issue. So, I think we're looking ahead now to a nervous second half of the year for the industry as a whole.
Richard Waters is our West Coast editor. He covers all things tech. Ukraine may soon get some more financial relief. A group of foreign government creditors said yesterday they'll support Kyiv's request for a debt moratorium. Ukraine has insisted on making its debt payments ever since Russia invaded nearly 5 months ago. It's wanted to stay on good terms with international creditors. But in a major U-turn, Kyiv pleaded for a moratorium. The government creditors who are backing Ukraine's request include the U.S., Japan, and European allies. They said they'll suspend debt servicing from this August through the end of next year. The group also said it'll encourage private bondholders to agree to a pause on Ukraine's debt payments. Yesterday, lawmakers in Sri Lanka took a step to address the country's economic crisis. They chose a new president. The last one was ousted by protesters and had to flee the country. The problem is the new president, Ranil Wickremesinghe, is the former prime minister, and he's so unpopular, there are fears there will be more unrest. Sri Lanka is not the only country dealing with a debt crisis, though. Other developing countries are in trouble, too, from Laos to Pakistan to Zambia to Argentina. To talk about the potential for a broader emerging market debt crisis, I'm joined by the FT's Jonathan Wheatley. Hi, Jonathan.
Hi there, Mark.
So, Jonathan, Sri Lanka has its own unique history of government corruption and mismanagement. What do people see in Sri Lanka that sparks fears of a broader crisis in emerging markets? I spoke to someone last week who described it as the canary in the coal mine.
It's unlikely that any other country will do the same exactly as Sri Lanka, but other countries do have their own homemade problems. But what's really bringing all those problems into focus is the multiple crises that are battering the world at the moment. The war in Ukraine, for emerging markets, the strengthening dollar and rising inflation and interest rates, all the disruption that was caused by the pandemic and in many cases is still going on, and a long-term growth malaise among developing countries. And it's all come together as a really unpleasant, toxic mix.
So, Jonathan, I'll admit, I am not an economist, but this all seems really bad. All these emerging markets potentially defaulting on loans at the same time. We have these recessionary fears floating around. If a whole bunch of countries go bust or default at the same time, what are we looking at here?
Well, fingers crossed, we hope things won't all go bust at the same time. I think what's happening at the moment is that an awful lot of countries, for example, one thing that people look at is how much a country has to pay in order to borrow. And an indication of that is the yields that those countries' bonds demand on secondary markets. There are well over a dozen developing countries now where the bonds are trading at levels that suggest investors think a default is imminent. But really, you have to go country by country and pick out where the problems are. So the pandemic and the war in Ukraine and rising rates and inflation, they're all horrible for very many countries, but they won't necessarily tip people into default. It's countries that had pre-existing problems that are going to be most at risk.
Jonathan, how are the International Monetary Fund and the World Bank handling all this?
Well, those institutions and others like them, the other development banks, right now they're having to deal with multiple crises. And it's not just the rising dollar and inflation and the war in Ukraine. We've got climate change and we've got the long-term problems that were already there before those came along of chronically low growth, underperformance in emerging markets, the fact that they've kind of lost their growth mojo over the past 10 years or so. And those institutions are not used to having to deal with multiple crises in multiple places at once. So that's a huge strain.
So, Jonathan, I got to ask about China. Beijing has become a major lender to developing countries. What is China doing about its loans to these emerging markets?
Well, what is next is how China reacts, probably next in regard to Sri Lanka. We already know that China has agreed to co-chair the official creditor committee for the bilateral lenders to Zambia. That was a big step, but we don't know how that's going to go. And we certainly don't know whether China is going to agree to take a similar role in other creditor committees. That is really crucial because before the IMF will agree to any deal with any country whose debts need restructuring, they need assurances from that country's creditors that they will do what is necessary to get that country back into debt sustainability. China has been willing to extend to give borrowers more time. It's been very reluctant in the past to accept a reduction in the amount of money that its borrowers owe it. So that's what everybody is watching, really. Will China sign up to a collegiate approach, or will it carry on doing deals behind closed doors on a one-to-one basis, which it has always done in the past?
Jonathan Wheatley is the FT's emerging markets correspondent. Thanks so much, Jonathan.
Thank you very much.
Italy's Prime Minister Mario Draghi watched his government unravel yesterday. After a bitter debate, members of Draghi's National Unity Coalition walked out of parliament and refused to take part in a confidence vote on his leadership. Draghi had demanded yesterday that members of his coalition recommit themselves to his reforms, but his gamble backfired. Draghi is expected to once again submit his resignation. He tried last week, but President Sergio Mattarella rejected it. Now, if Mattarella accepts Draghi's resignation this time around, it would trigger early elections in Italy and add even more political uncertainty to already jittery financial markets. So you can be sure that Italy will be on the minds of the folks over at the European Central Bank, which meets today. Before we go, the UK is looking for a new leader, too. Right now, bookmakers and opinion polls are betting on Foreign Secretary Liz Truss as the favorite to replace Prime Minister Boris Johnson. The other frontrunner is former Chancellor Rishi Sunak. Truss and Sunak will battle it out over the next month or so. The results are set to be announced in September. You can read more on all of these stories at FT.com. This has been your daily FT News Briefing. Make sure you check back tomorrow for the latest business news.
And that's all from the briefing for today. If you enjoyed this episode, please follow BizNews Radio on your preferred podcast channel to make sure that you catch tomorrow's show.